Hi everyone, I'm Beth Schulhof and I am a tax credit specialist here at Brown Edwards. Very thrilled to be here. Um, what does it mean to be a tax credit specialist? Basically, all I work on are enterprise owned projects and historic tax credit projects. So I'm hoping today to give you a little bit of fun and a few grins for some stories as we walk through shaping the future through the past. We'll discuss some enterprise zone projects and logistics and how-tos, and also after that, talk about some historic tax credit projects. It really has been such fun working with this. I can't believe I'm about to admit this to a large group of folks that I haven't worked with before, but I've done this for over 20 years. And looking back, it's really kind of incredible to believe that I found something that has just been fun and challenging, um, combining numerical number skills along with kind of a passion for art and architecture. And it's just been kind of a whirlwind. And before we begin, I'd like to share with you a little bit about the very first historic tax credit project that I worked on. I was hired to do enterprise zone work, and that had a deadline of April 1st. So long about May 1st, an tax credit investor came with a project that needed a historic tax credit certification, which was basically at that point in time a review of the costs of the project. Well, the gentleman walked in early in May in his white snakeskin cowboy boots, carrying two very large Xerox paper boxes. And as you can imagine, anytime you're new on a job, you want to do it right, you want to do it perfect, you want to look at everything thoroughly. So I open the boxes, and what do I see? But this is funny, going back to our previous presentation, 16-column handwritten list of millions of Home Depot receipts. Gas receipts, Home Depot receipts. There were a few invoices from HVAC contractors or electricians and things like this, but it was just mounds of paper. Like, what do I do now? Looking back on that 20 years later, I realized that that was probably the best experience I could have had, although very frustrating at the very beginning. It was a way to teach me how to look at these projects, what to look at these projects, and really how to learn about them. And I'm very, very glad in retrospect, for that opportunity to learn, going through all the details and really having the time to do it. So why am I telling you this at the very beginning? Well, we will circle back around, and at the very end, you'll understand why. Alexa, thank you for changing that. And by the way, Alexa will be handling the PowerPoint presentation. So if I do a next slide, please forgive me. What I'd like to cover for each of these programs is basically, what are the rewards? What is the application process, and what are the logistics of qualifying for the awards? Basically, and probably the most important question is number 3, what's the award timing? As in, when do I get my money? We'll give you a few examples of enterprise zone and probably more historic tax credit projects. And before we get into the details of each one of these, I would like to share with you that these two programs can be worked together. And there are a number of projects that qualify for both and will realize the benefits of both. But as you see the types of eligible projects, that will make a little bit more sense. The next bullet, how you can help your management and staff back at your locality, I think is probably one of the more important things. we'd really like to see you as the numbers folks really be in a position to be the stars and the leaders in bringing these programs to your locality's management, to the economic development staff, perhaps to clients that come in. You'll be able to share with them the benefits of improved property resulting in real estate taxes going up, more folks moving into your localities, and just the general economic well-being. I think you probably, for those of you who have been through some of the areas in Richmond that have seen a lot of growth, notably Manchester and Scott's Addition, I think you can see how those programs have changed these two particular areas, as well as areas throughout the state. So hopefully you guys can bring it to your various localities, both internally and externally. And Brown Edwards is always here to help you. At the end, you'll have my email and phone numbers, and feel free to reach out anytime if I can help in any way. We're happy to do it. We're happy to share examples of how it has worked. Just a little note, you'll find that I'm going to give you a lot of stories. So that this is the fun part. It's really, and there are two stories here. Prior to coming back into the accounting world, I was a banker at one of the very large national banks with small business. And this is very much a coincidence, but one of the buildings that I financed as a small business lender came back about 15 years later and was converted from a warehouse to apartments in Scott's Addition. And I had the pleasure of working with one of my former banking clients to help him get tax credits. So it's now apartments that are full in Scott's Addition, very, very prominent area for both work and residence and play here in Richmond. Second story is the first building that came about in Manchester, which was called Plant Zero. At the time, it was an old warehouse and manufacturing facility that really jump-started that whole development. It was originally developed as art studios, an event space, a little cafe restaurant type of thing, an art store, and it had 5 or 6 different uses going on within that building. We were able to get historic tax credits and enterprise zone for all of the work that was done there. And it was just a delight to see it grow and flourish and see the impact that that one project had on the whole neighborhood. And now I think the only thing that they're missing in Manchester is a grocery store. So, and they're constantly on the lookout for that. So it's just, it's been just a tremendous opportunity, I guess is the best word, to watch these areas grow and succeed. And that's what these programs are all about. Alexa, if we could have the next slide, please. It's a poll question right at the very beginning to talk about enterprise zones. Is there an enterprise zone in your locality?
Launching the poll now. Closing the poll. Okay, Beth, are you able to see the results?
I am. And some of you aren't sure. So if we can help you with that, we'll be glad to send you in the right direction and help you if you're interested in them. And I see that a number of you do know that you have an enterprise zone in your locality. So you're familiar with it, and hopefully you'll learn a little bit more and see how you can help some of your businesses. Throughout this presentation, I hope to give you a few examples and show pictures of some of the projects that we have worked with. On this introductory slide for the Virginia Enterprise Zone Real Property Investment Grant is a picture of Stella Rose at Stanton Station. This is a wedding venue in Stanton that is the old train station. Having gone to Mary Baldwin, this one is very near and dear to my heart. And it was a lovely rehabilitation, taking advantage of both enterprise zone and historic rehabilitation tax credits. Unfortunately, it has been hit by COVID and is closed for the time being. But back to enterprise zones. They are essentially an economic development incentive to improve commercial real estate or to build new commercial buildings in economically disadvantaged areas. Keyword in this, or key two words in this, it's related to commercial buildings. It is not available strictly for residential buildings like apartment buildings. It's got to have a commercial aspect to the building. It can be either a rehabilitation or new construction. The second point is economically disadvantaged areas. There's an application process that you go through with the Virginia Department of Housing and Community Development, which is the overseeing agency for this program. It involves a lot of demographic information. And it is something that the locality would enter into along with the Department of Housing and Community Development, or as I will probably be calling it, DHCD. How do we calculate this grant? It's calculated at 20% of hard cost of a construction, up to a $100,000 maximum grant, after the applicant reaches a threshold of $100,000 for rehabilitation or $500,000 for new construction. So basically, you would max out your grant for a rehabilitation project if you spend $600,000. So 600 less the 100 threshold equals 500,000, 20% of that, you get your maximum grant. The grants are awarded for a 5-year period. You can only apply within a 5-year period. After that, 5 years has expired, you are certainly available to apply again. And that has happened to a number of my clients. New construction, it's available for that too. The grant will increase to $200,000 if the project hard cost exceed $5 million. Back to the application process to get a zone. Any locality has to offer local benefits in addition to these state of Virginia benefits. The two that I have seen the most are a tax abatement for a certain number of years, and that varies by locality. Another local benefit that I've seen quite a bit is waiver of permit fees. So keep in mind as you do this that a local benefit could be required. Those are independent of the state benefits. So you could offer those in areas of other than enterprise zone, but that's certainly up to your locality. The enterprise zone grant, or the designation is a better word, is available for a 10-year period, after which it needs to be reviewed. You need to reapply and review. There's a limited number of enterprise zones by the legislation for this program. I believe it's 37 zones. When the legislation was implemented, there were certainly more than that. There were well over 40, approaching 50. So they are gradually winding down as areas really reach their full potential. And Chesterfield County is one of the areas in the state that graduated out of the Virginia Enterprise Zone program. It is the business park off the 95 exit south at Woods Edge Road. It was just basically raw land that was filled with new buildings, perfect distribution site. And after the enterprise zone period, it was essentially full. So they graduated out of the program. Alexa, the next slide, please. The applications are submitted once a year to the Virginia Department of Housing and Community Development, or DHCD, based on the receipt of the final certificate of occupancy or final building inspection. This is probably the most important bullet of this whole presentation on enterprise zones. The DHCD, it will not grant an application based on a temporary certificate of occupancy at all. We've tried. Sharing one story that happened to one of my clients, which was truly unbelievable. They had done a small retail storefront, and at the time that they put in the door, they had the bumper at the bottom of the door fully in compliance with ADA. From the time that they finished the project to the end of the year, the ADA standard and that threshold, or kick plate essentially, had to be made larger, and they had not done it by the end of the year. So that final certificate of occupancy was waived, and they had to get a new one, which was not granted until the next year. So we had to retract that application and submit it again for the following year. So little changes like that that you may not even be aware of can certainly impact these applications. Fortunately, that's the only time that I've seen something like that happen, but it was quite disarming to have that happen to one of my clients. It really, really was. The applications are all due by April 1st, following the year of the final certificate of occupancy. So right now, we're working on applications for final COs that were issued in 2021. Basically, the grant is available for commercial buildings. We had mentioned that, but we hadn't mentioned mixed-use buildings. It is available for mixed-use buildings, and that is defined as a building that has at least 30% commercial square footage, and that's usable square footage. Part of the application package that will have to go in for one of these mixed-use buildings is a supplemental form that an architect will need, the project architect who submitted the plans and specs for city approval. He will have to sign and seal the square footage and do a calculation showing that's at least 30%. This application package includes at a minimum, and I'm saying that at a minimum because there might be additional forms, that mixed use is an example, but at a minimum, there's an application form, a copy of the final certificate of occupancy, a Virginia W-9, and the CPA's agreed upon procedures report. All of those go in to DHCD by April 1st to be considered for a grant for the 2021 grant year. So you can tell this is where we come in. We do these agreed upon procedure reports. DHCD has designated the procedures that we are to use. Most of them are agreement between the placed in service documentation, which is the final certificate of occupancy or building inspection. We have to agree the name, the date, the address, things like that. One of the interesting things that I have found through the years is that quite often the name on the certificate of occupancy might not agree with the applicant's name. This happens quite a bit. It's because the contractor will pull the permits in the name of perhaps the operating entity, and the building is owned through an LLC. We do have the opportunity in that agreed upon procedures report to explain the difference, and I've really not had any problem with DHCD accepting that. So again, it's a pretty paper intensive package. Now, because of COVID, these application packages are submitted through an online portal that's established by DHCD. In prior years before the COVID outbreak, we had to send in a whole lot of paper by certified return receipt. Last year, we had to do the online submission as well as send everything in. And this year, they are just looking for the online submission and will not accept all the paper. So that's a good thing. It's a very simple system to use. And back to one of the points, how can Brown Edwards help you and your residents or applicants for this program is basically we work with them through the whole application process, and we will do all of the online input for them. We have an excellent relationship with DHCD, and last year I probably was too much of a pest in that I called them or sent emails to the folks that review the application to make sure that they arrived safely. I send that on to the applicant along with the confirmation receipt of the online application package. So again, the most important thing that I can't stress enough, and you can share this with your building official and the building department, is if they get a boatload of calls in December of needing a final certificate of occupancy, this could be why. So Alexa, if we can have the next slide, please. What I have here is an application checklist that you should feel free to share with any potential applicant of what we would need to complete this application package. Again, I can't stress enough, the final certificate of occupancy or final building inspection, the full name and tax ID of the applicant entity. Hopefully it's the entity named on that CO or building inspection. And as a note on the building inspection, sometimes the names are not listed. We will point that out and then refer them to a copy of a city assessment that we include with the package that will highlight the name, and hopefully those names agree. If not, we will send the assessment copy in and explain any differences. Again, the tax ID, we need a copy of the applicant entity's general ledger indicating that all costs have been capitalized. A change for this year, because of some changes in the tax law, is that now we are able to count costs that have been expensed. Again, these are hard costs of construction, so it's basically demolition. Any site work is applicable and can qualify for this. Anything that you do to the interior of the building, carpentry, windows and doors, HVAC, electrical, plumbing, all of this is taken into consideration in getting to your $600,000 maximum. Interestingly, one of the things that I had run into that's not qualified is an awning. And a lot of buildings do have it, especially a lot of historic buildings. And I had one that was an art gallery that had it was down in Shockoe Bottom in Richmond, and they put in a sun sensitive awning that would rise and fall according to the sunlight that was available to protect the artwork inside. It was all wired into the building, and it had a light metal frame, and the awning itself was there to protect it. We had to show photos and show how it was wired into the building and send a copy of the invoice indicating that it was wired into the building and why to get it approved. But we did. So that was because it was very expensive, and that was a very happy thing for our clients. One of probably the most time-intensive part of these application packages is reviewing the final AIA, or American Institute of Architects, pay application. And that is a listing by trade of the costs of the project. One of the procedures in that agreed upon procedures report is that we have reviewed 100% of the invoice and evidence of payment for all qualifying costs by trade. So the application does list by trade, again, demolition, masonry, HVAC, electrical, that type of thing is required. It cannot be vague explanations at all, or you will get calls. And that's the one thing we strive to avoid. We like to have all of our applications approved without calls from DHCD. As far as what qualifies as evidence of payment, the two that we have used more often than not is the final lien waiver or canceled checks. If those are not available or readily handy, we can use, if there's a note in the ledger of the check number, we can go back to the statement if that's more easily accessible. Credit card receipts work too. So there's a wide range of things that we can use for that. But again, most important, and I'm sorry I'm harping on it so much, but it's got to be that final certificate of occupancy. And again, we hope that the names match. Alexa, the next slide, please. Grant timeline, very important. The applications are due April 1st using this online submission system that I explained earlier. They will not accept applications later. Usually we get questions by May 15th. Sometimes it's a little bit later if there's something that they don't understand. We have until June 1st to answer the question. Last year I had questions on June 2nd. I asked why. They had not reviewed it in time, and I was fortunately had the answer to one of my questions and was able to send a photograph explaining it. So it all worked out okay, but there's kind of a tight timeline in there. So if that sets into panic mode, you all may be called. But the all important, why are we doing all of this, comes on July 1st. We are going to send out checks. The state will send out checks usually by June 30th, the end of the fiscal year, and the checks are sent and the award letters are received. So basically, that's it on Enterprise Zone. It's a wonderful program. One thing that I have seen in dealing with a lot of bankers that I work with is in years past, the program was fairly certain to be grant. You were able to get 100% of your grant. Alexa, the next slide, please. On a final note, the grants can be prorated now, and you might not get 100% of the grant. The reason is the General Assembly appropriates a specific dollar amount for the program. And to the extent that applications exceed this amount, the grants are prorated. For the last grant year, everyone got about 92% of what they asked for. I've seen it as low as 60-some%. So bankers, since this has really come into a prorating area, and it has for probably the last 7 or 8 years, bankers are not as willing to lend with this as a method of repayment as they have been in the past. One other note, there is also an enterprise zone job creation grant. I personally don't do them, but we do have CPAs here at Brown Edwards that do. It again is a paper-intensive thing that lists each employee, if they change jobs and there's a salary adjustment, all of that is noted as well as their health care coverage. So it's based on the extent that the employee is paid above the prevailing minimum wage and that they have health insurance. So those are two key things to think about if you're thinking of that program. But if you're interested, we can do a special program for you on the job creation grant. And if you would just email or call, if you're interested in learning more about that, I can put you in touch with the appropriate folks. So that wraps up Enterprise Zone. Alexa, were there any questions, possibly?
None have come through yet, Beth.
Okay, perfect. On to historic tax credits, which are lots and lots of fun. Again, we're going to start with a poll question. Are there old buildings in your locality that someone would like to save? Yes, no, or unsure?
Launching the poll now. Closing the poll.
Yay. 76% of you have said that there are old buildings in your locality that someone would like to save. And 22% are unsure, which means there probably are. So we would love to help you and any of your constituents, any of your staff in learning more about these programs, in discussing particular projects that may be coming to the forefront and coming to your attention. But again, to remind you of why you guys are the money folks. And if it's a building that the city may own and want to sell to maybe take advantage, or that's a building that is, especially a school building that's no longer in use, that you might want to sell or donate to a not-for-profit, or perhaps a university, or rehabilitate as a community center, something like that, these programs may come into play. So we would love to talk to you about them. These historic rehabilitation tax credits are available both at the federal and Virginia level. The federal program is administered through the National Park Service and the Internal Revenue Service. And in Virginia, it's administered through the Department of Historic Resources and the Virginia Department of Taxation. The Virginia Department of Historic Resources is the state's Historic Preservation Office, or the SHPO, SHPO, Historic Preservation Office, State Historic Preservation Office, excuse me. That is a term you will hear bandied about. All that means is that they are in charge of all the historic resources in the Commonwealth, but they are the conduit between the applicant and the National Park Service. So all of the paperwork is originally submitted to DHR for their review and then forward on to the Park Service. These are tax credits, and what is a tax credit? It is a direct reduction of a tax liability. So it's a dollar for dollar reduction. It is not a basic deduction that lowers your income in order to get a lower tax liability. It's a direct dollar for dollar reduction of the tax liability. Both the federal and Virginia programs are guided on the architectural side by the Secretary of the Interior Standards for Rehabilitation. That's an extensive guide on the proper treatment of the historic resource. There's a lot of guidance in the standards and explanations for the standards related to masonry, related to windows, related to cleaning the building. One thing that's a big no-no is sandblasting masonry. You have to clean it with the gentlest, quote, gentlest means possible. You do run up, in all honesty, against some energy efficiency things in placing in using the Secretary of Interior standards versus some, say, types of windows that may be requested. But usually these types of things can be compromised, if you will. And working with DHR, they're wonderful reviewers there that really try to work with all applicants to everyone's satisfaction. If one of your constituents does not want to deal with all of the paper, there are historic consultants that will prepare these packages, and we'll get more into what that's all about later. The tax credit itself, the number side, the second silo, if you will, the architectural side being the first, the second silo is the number side. What's the tax credit going to be? How much money will my taxes be reduced? Is based on something called qualified rehabilitation expenditures, or QREs in the industry lingo. And they are nothing more than hard and some soft costs of the rehabilitation project. Hard costs are the things that we talked about in the enterprise zone, the demolition, the masonry, the electrical, the HVAC, the painting, that type of thing. Whereas the enterprise zone did not allow soft costs, the historic tax credit will. As long as they're capitalized, you can include things like the architect's fee, engineering fee, the historic consultant's fee to prepare those application packages, our fee to do a cost certification. If it's capitalized, you can do the insurance and real estate taxes during construction period. So there are a whole host of soft costs that can also be included in QREs. There are differences between what the state and what the federal government will qualify, notably as related to site work. Virginia will qualify some site work that is involved in maintaining the integrity of the building, and that is usually something related to drainage. So the final bullet here is costs that don't qualify include site work, additions, appliances, the purchase price of the building. Again, keep in mind that, as you will see later when we talk about one of our examples, site work on the state level only can be included. The credits are calculated at, for the federal level, 20% of qualified cost, and at Virginia, 25% of qualified cost. And as an example of an addition, we have a picture of the VCU Brand Center. This is the advertising school at VCU that we worked on. What you see prominent in the foreground is an addition. It is helping stabilize what you see to the back left, which is the historic building that incidentally was the livery stable for the original Jefferson Hotel. And as a livery stable, it really did not have any structural integrity because the horses came in and they stayed on the ground floor. They did have a, like a platform elevator, but that did not require much structural integrity. So to be able to use this building for classroom use, especially for a lot of very creative source, we needed to make sure that the building had the structural integrity to maintain this weight. Hence that addition. So it was in addition to that, of course, that livery stable did not have restrooms. It was not ADA compliant. It would not serve the purpose. So the addition contains all of that information or all of that structural work, as well as housing for all of the systems, the electrical, the plumbing, the sprinkler, all of that. So we were able to work with the facilities folks, the architects, and the contractors for the project to be able to segregate all of those costs because they did serve the historic building and get those qualified. So knowing the details of the project and having a very strong team that works together from the very beginning really can be an asset in really claiming as much toward qualified cost as you can. This project is a state-only project. As we'll see later in the program, it's difficult to use the federal projects for things like a not-for-profit, an educational facility, things like that. So this was a state-only project. But it's a good example of an addition, but how if you work to really segregate the costs, we may be able to bring some of those in and you'll get a greater return on your investment. Alexa, the next slide, please. Thank you. In looking to apply for one of these, it's really a question of, is the property eligible? And to answer that question is basically, is the property individually listed on a historic register, or is it a contributing structure in a historic district? We can help you find that, but the way you do it is to go down to the bottom and call Chris Novelli at the Department of Historic Resources. He is the first contact for DHR. He is a wonderful source of knowledge about this program on the architectural side, and he loves to help folks. But if you want to do it online, you go to dhr.virginia.gov. You'll see an indication for historic registers, click on that. Then go to the state and national register nominations, click on that, and find your locality. The chances are there's going to be a long list in all of your localities. So back to just call Chris. And if I can help you, I'm happy to do it. It's quite easy to discover that. So just give me or Chris a call and we can work with you on that. What types of property are eligible? For the federal program, it is income producing property only. Income producing can be commercial real estate. It can be residential real estate that's exclusively apartments. It can be mixed use, like we had discussed before, which in all honesty is a lot of it these days, but it's got to be income producing. In Virginia, we will also consider income producing commercial and residential property, but also available for your personal residence. So if any of you have an old home that you would like to rehab, you might be eligible for some Virginia credits. The building that you see to the right is one that I have recently completed. Doesn't look like this now. This was taken prior to the rehabilitation, and it was a mess. Plants were growing inside. It was pretty incredible, and it is a lovely building now in the VCU neighborhoods with, I believe, 17 or 18 apartments for students. So a lot of that in Richmond is that type of housing. But it's a great project that has recently been submitted to the Department of Historic Resources. This one is all residential, so it will not qualify for the enterprise zone, but does for both the federal and state historic credits. What type of information does DHR and the Park Service need? This is on the architectural side only. Basically, Part 1 application is detailing the significance of the building. That goes into the Department of Historic Resources, and Chris Novelli is the reviewer of those Part 1 applications. So basically, it's tell me about your building. Part 2 is where it gets involved, and you may want to get someone to help you with this, notably those historic consultants, because it's a very detailed description of the current physical state of the building and details in words the rehabilitation plan. So it's a very descriptive plan. Along with this description are the detailed architectural plans and very detailed photos. The photos have a photo key to the detailed plans. This is sent into DHR hopefully before construction starts. Doesn't always happen that way. Let's be perfectly honest about it. And they will weigh in on whether any changes need to be made. That's why I said hopefully get it in early. You can work with your architect on these. Architects quite often work with these historic consultants together on the detailed plans and specs, and the historic consultants usually take the photos. I still haven't come into this picture, but I come in now on the Part 3. The Part 3 is, did you do what you said you were going to do in the Part 2? So it confirms completions with detailed photos that are photos of the identical shots that you send in with the Part 2, showing that it's completed. And then a cost certification report, which can either be an audit or an agreed upon procedure depending on the size of the project. If the project is $500,000 or above in total costs, that includes qualifying and non-qualifying, then we do an audit. If it's less than that, even if it's down to $20,000, just a little one, it requires an agreed upon procedure, and DHR has written those procedures. Again, those procedures kind of mimic the enterprise zone in that we need to look at 100% of the invoices and compare a lot of the completion information with the applications Part 2 and draft Part 3. So Alexa, next one, please. This is a project that I have recently finished in Richmond that is a duplex, and I thought it would be fun to show you a before and after. It's a duplex in roughly in the Churchill neighborhood. The before building is when a little bit of stabilization had been done, and I think you can see quite a difference in the two. It does have an addition on the back that we did not capture in this, but you can see that that porch is there. The porch is also an addition. We were able to include the steps to the porch because they are there in the historic photos, you can tell, although of a different composition. But there was a lot of structural work done on this, as well as bringing them up to current code compliance. So there you have a before and after of what can happen in some of these neighborhoods. And I just thought that was a wonderful, wonderful project. This is a duplex. So interestingly enough, it's 2 addresses. And we had to certify each address separately. So there were separate Part 2 applications, separate descriptions. The additions that were made were different on each one. So it really was two different projects, although there was only one construction contract. So we worked with the contractor to really segregate the costs for most of the line items that would qualify between the two properties. So on that note, Alexa, next slide, please. The final application testing that we, as the auditors or accountants, do is something called the final application testing or substantial rehabilitation test. And a lot of people get confused on this when they read about these programs. The federal program is based on the applicant's basis in the building on the day before the project begins. So they must spend an amount equal to their basis on the day before the project begins, and they need to spend it within a 24-month period. On the Virginia side, it's the same 24-month period, but the threshold is an amount that is equal to 50% of the assessed value of the property in the year before construction begins. As an aside, for a personal residence, it's only 25%. Again, that's in a 24-month period. When most folks read this, they interpret that the construction needs to be completed within that 24-month period, but that's not the case. It is only that 24-month period is only a testing period. We can count costs before or after, but the 24-month period needs to end in the year that the construction is completed. For larger projects, we always recommend that the project be phased. And that does something, it does two things. Number one, it extends that 24-month period to 60 months. A lot of developers will come in and, oh, I can finish this in 24 months and find out that they can't. It doesn't cost anything extra to phase it. A phasing plan does need to be submitted to DHR, but that's relatively easy for the consultant to do. We have found that with Virginia projects where something truly unexpected has occurred, we can go back and phase the project with proper explanation to the Department of Historic Resources. On the federal side, that's impossible. You have to claim a phased project before you start construction, and there is no exception to that rule. So if you're talking to a business within your locality about a large project, please encourage them to phase it. And we can certainly help you and guide you through any conversations with them. So Alexa, the next note, please. Just some logistic notes. As I mentioned before, both sets of applications, federal and state, are submitted through the Department of Historic Resources. The Part 2, when you submit the Part 2 application, it will be reviewed by DHR and then be forwarded to the Park Service for their review. Each of those reviews normally take between 30 and 45 days, especially on the state side. I would really guess 45 days. On the Part 3 application, which is the finished work, again, DHR will finish the architectural review and inform the applicant of any remediation that may be required. And that is happening these days. I, for instance, have one where in a particular part of the building, they used a laminate floor instead of wood. So that floor needs to come up and wood needs to go down, which means I've got to take out the old cost and put in the new cost for him. So that's the type of thing that they're looking for, and it's getting much more prevalent these days. So again, I encourage you to work with DHR and any historic consultant to avoid those pitfalls. I personally, as the accountant, don't know all of those pitfalls. Again, DHR will forward that Part 3 to the Park Service, but when they do that, that's when they review the work that I do, that agreed upon procedure or audit cost certification. They will call me with any questions, but my goal is not to have any questions come in. So I'll be working with you through the certification process to work with you, your contractor, your historic consultant, to make sure I understand everything and appropriately word the trade for review by DHR so there aren't any questions. And I'm happy to say that there haven't been many lately. So Alexa, on the next slide, please. This is getting back to my very first story. These are the questions that I will ask clients, is basically tell me about your project, the type of building, what's your budget? And here it is. I learned very quickly, and I honestly asked this question, how many times did you go to Home Depot or Lowe's? I really, really do. And that tells me so much of what I need to know about your project and about the work that's going to be required. Tell me about your team. It's important to have a historic, an architect that's experienced in historic projects, to have that consultant on your side, to have a contractor who understands this. One of the buildings in Richmond had a mason that wasn't familiar with it, and all of the masonry had to be repointed after it was completed. That was one of those big remediation things. An applicant will need to have all of his invoices and receipts and payment evidence. We'd like to see a list of all costs in Excel or some sort of general ledger. We'd like to see a copy of the Part 2. And most of all, be ready for questions. And as I said before, better the questions come from me than from the Department of Historic Resources. Next slide, please. Syndication is the term that is used to actually monetize these credits. It is a legal structure, so it's very important to have a proper attorney that is very experienced in these things. Basically, the credit is allocated to an investor in turn for a contribution to the applicant entity. This percentage of ownership in the tax credit entity is based on ownership on the federal side, and it can be specifically allocated on the state side. So they can own, the state investor can own a very small percentage. That's one of the reasons why it's much easier to syndicate the Virginia credit than the federal. Federal credits are very difficult, and these investors are looking for much larger projects, probably in the minimum of $6 to $8 million minimum in qualified costs. And the Virginia credits are quite easy to syndicate, even for personal residences. I just completed a lovely residence in Church Hill that was less than $500,000 that they were easily able to syndicate, and quite happy with the results. So I'd like to throw out, if you're interested in learning more about syndication and more of the details, we would be happy to host a webinar devoted exclusively to this topic and bring in an attorney and a syndicator who might be interested in meeting you and teaching you more. Okay, my favorite project in the last 20 years is Hanley High School, and I hope that someone from Winchester is on this call, because it was an incredible project with an incredible project team of wonderful historic architect, the consultant, an incredible architect who did the plans and specs, a very patient project manager contractor who taught me so much about construction. It was a 5-year phased project that occurred while some students were in school. Of course, most of the work was done during summer, but this construction manager, contractor, really shuffled students around in the classrooms and the teachers all around this building while construction was going on. It was incredible. I don't know if you guys know this, but Hanley High School is where the Corcoran Art Gallery paintings were stored during World War II. So in my very first visit, I was warned to wear blue jeans and grubbies and learn about it. So I got to crawl where they were all hidden. It was really just probably the highlight, one of the highlights of my career. One thing that we did on this building is because of the computer facilities that they wanted to put in, they increased the square footage by a half story, which is what you'll see behind the main entrance of the school. They needed to raise the floor for all of the computer cables, but to keep the code required height, they had to increase the height. So we were able to work with the contractor to actually exclude that half story. So the man, patience of Job to deal with me on that. In the foreground, you will see the very beginning of what is known as Handley Bowl, and that's the football stadium for Handley High School. There is a little opinion in the federal rules for this program that a stadium can be considered a building. Well, that was all I needed to find out. So there were a lot of drainage that needed to be handled for Handley Bowl to actually be workable. And we were able to get state credits on this project only, but because the drainage was a qualifying expense for the state purposes, we were able to get about $2 million in extra qualifying costs for this project based on Handley Bowl, which was not in the original budget for the project. So they had syndicated these credits, so they were actually able to realize more cash than had been budgeted. So they were able to help and improve the sound system in the auditorium, the lighting in the auditorium, the seats in the auditorium. None of those were qualifying costs in the project because equipment can't be qualified nor can seating, but it was something that they had not expected to be able to do. So it was just such a treat and will always be such a treat to have worked on this. Earlier in the, and I did not point this out, so my apologies, but earlier in the slides, there was a picture of Patrick Henry School of Science and Art, which is the charter elementary school here in Richmond. They were able to use historic rehabilitation tax credits over a 3-year period that was a phased project. So if any of you are interested in school buildings, that's certainly within the realm of possibility. Again, it was syndicated, so it was put in an LLC. So getting an attorney to explain to your officials is probably in order. It certainly was on that one. But the tax credits were used as a funding mechanism for that project. We've done a lot of colleges recently, worked with them on capital improvement plans on their campuses. We have also worked with a lot of churches, as well as the typical apartment buildings that you see in a lot of historic districts these days. One of the ones we worked on was Miller and Rhodes, which I think, well, honestly, they told me I was the first woman who had shopped at Miller and Rhodes that had come in. When I burst into tears the first time I went in the building and saw where I had shopped as a much younger person. And fortunately, they understood it, but we had to have a little moment on that. So I have run out of my hour without telling you some of the fun stories of some of the tax credit crooks. But go read about Justin French, and you will find out how he became a guest of the federal government using tax credits. Fortunately, I did not work with him on any of his projects. He called me once and he told me what I told him what he needed to supply. I never heard back from him, but it was a very interesting day, the day that the FBI raided his office and all of the black SUVs blocked Carey Street. So yes, he put up, but did not connect, solar panels. He took a friend's, a historic consultant's letterhead and erased her invoice and made up an invoice. So there was a lot of interesting things going on. So I will leave you on that note because I am almost 5 minutes over. So apologies for that. Alexa, the last poll question.
All righty, the poll is being launched now.
Are you interested in learning more about enterprise zone or historic credits? And who would you like to teach? Local management, local economic development, your citizens and constituents, or everyone? And we'll be glad to help you. So thank you very much.
Okay, closing the poll.
Thank you. Please feel free to reach out. Alexa has a slide with my contact information. I'll be glad to help you in any way that I can. Thank you.